gentlemen, Jay Tyler here. Welcome back to Jack Fund Management. We will put out a video on finance and news basically bi-weekly. This commodity bull raged longer than it normally, with fiscally pumped conditions could until demand destruction or some virus for ducks. 10 years gravitating towards two: inefficiencies, lack of productivity, and adaptivity. As we show and have shown in data, America has mostly brought this upon itself. Supra-State organizations do exist: IMF, NATO, WHO, and so on, and they can, as they see fit, sway things. US politicians' guards have long permitted or encouraged Americans to sleep. Oil industries have made out America tolerated some genocide in Ukraine. If protracted, China-Syria pushback could arise. This city on a hill struggles against going downhill. Currency has shifted. Harder money, ticker SILJ, can once more come to a fore. When exorbitant privilege gets abused, less energy to back it up, US civilians may not feel ready. It looks like many streams of power vie for topmost control. Over Ukraine, we see challenges for energy control. US dollars, the petrodollar some call it, had gone by and large backed by energy. Afghanistan, sitting atop up to $1 trillion in rare earths, which could power this new energy, made it a strategic flashpoint. China, challenged for growth, merged with slumping construction and property problems at this time, had a bigger player who shorted nickel, on a hook for $2 billion, similar to a Melvin Capital. Interwoven here, China ramped up the CCP printing press. If 2018 as analog, markets could run up from here, and could retest month 2 of this year. Market watchers look for recession chances, supply, demand, and outlooks on China relations. Steel rising, this name having a price to sales of 0.8. Steel Dynamics, ticker STLD, has seen investors pouring in. On another side, if this Fed induces a recession, they could afterwards turn back on that spigot. This can launch software names and technology like Arista Networks, ticker ANET, atop of grade A fundamentals, with high-speed networking taking share from Cisco, nimbleness, and tons of opportunity ahead. This reordering and reshaping of global dynamics reasserts gold as a fully financially viable hedge. A battle definitely foments. America would not like to just give up such reserve status. 2002-ish, all over again, this yellow metal, ticker GLD/CGAU, and very much silver, ticker SILJ, and silver miners, as gold has a few limits, can outrace most else. If and when China gets more aggressive into war and or whenever they choose, stops providing steel to Western states, United States Steel Corp, ticker X, looks like a place to dock. As America froze Russia, China could do this similarly to America. Ray Dalio blabbering about cash equals trash. Cash actually does equal a position. We bet a lot of people wish they had more cash on hand to deploy here on pullbacks. Some scrounge for some more cheaply priced assets, perhaps in Europe, ticker EURL. Leftists may point to well anywhere and Russia. They wash over very increasingly underwater real rates, concomitantly stoking demand with trillions in handouts. As this went on, this Fed engaged in outright moral hazard. America has seen some effects of this, and as of late conditioned to not manage, teenagers in retail had picked up unideal habits. Less middle class, bifurcation, communism still lurks. With prices going up, administrations probably better think quickly. Let them buy electric cars betrays a disconnect. In order to get to this imagined net zero goal, that calls for much more lithium. Russia-China orbit or Western trade orbit, states choose. After our realization, Western powers can freeze currency in notes, emerging markets choose where to side as far as weighting in dollars. Given these geopolitical tensions, many global investors have divested and has seen as much in Chinese equities, bringing us back to a reason for them burning midnight oil in that printing room. Not that those dozen or so at a top commanding these places care, they get more than a cut no matter what. China experiencing another bout of virus saw shares of Moderna, ticker mRNA, react positively. Today's Democrats may have gotten a little taste of reality as Raskin withdrew. During a war and more pressing issues, these air castles have come back to earth. China, a la international court, sided with this Russian war. This Fed went to an obvious 25 basis points. They promised 7 hikes this year. Yield curves have flattened on this. Focused on inflation, we have had a bit of a bear market Biden. Employment and this economy may push a recession off for a year or 2 at most. A cooperation of some form out of necessity could form in China regarding global capital and internal tech. It looks like markets got tired of borrowers and this Fed dot plot looking like it showed a take-it-easy stance. No more joke IPOs, overpriced illusions getting peddled. This can lift up real businesses like Nvidia, ticker NVDA, from overcrowding. Sigils point to Putin waking up to a world that has left him trailed, mind over muscle. Bombs to us forego consciousness. We scan for how this plays out geopolitically. Elsewhere on this global stage, IMF, International Monetary Fund spokespeople, in relation to, yet no direct link with Ukraine, try to roll out CBDCs, or stricter cash controls. We see different states choosing to hold different currencies. US politicians, some trading to any highest bidder, whatever fits a plot, often win. Tuberville, for instance, pretty much perfectly timed this gold breakout. We may not see those Pelosi calls going stale. Biden or handlers signing this crypto babble probably has to do with escorting in, which dovetails with IMF reports, CBDCs, an extension to counterparty consequences with this nickel shorter from China, and all other trades whom this LMT, London Market Exchange, halted. JPM, a bigger counterparty, got exposed to this. Banks since felt a bit more nervous about each other. Interbank lending rates went up. In an era where money trumps law, with capture or non-disclosure, with acceleration, markets may work like a tail to a dog. Dog in this context meaning power. Whatever gives power could do well, mixing some fundamentals, success, and rules. Western states used to perhaps have freer capital markets. There, less and less, this looks like a case. Take Matador Resources, ticker MTDR, an independent energy corporation acquiring oil, and with this Black Sea constrained supply, where power had a hand, if those moneyed say oil goes up, it can go up. Matador, full of free cash flow with WTI at these levels, has put out solid production guidance. Stocks, especially SPX names, on a 5-year basis no longer look rich. Suppression for power may unfold. US politicians may rather see $150 per barrel oil, $6-7 per gallon gas, over 2,500 plus gold. Establishments often love sacrifices and scapegoats. Powell said he will not chaperone in a recession. Of course he did. Like transitory, 10s, 5s disagree. NATO, Europe, only over and above solidifying in common debt, energy, strategics, and defense. China looks to scoop up more assets in Russia. All this shaking up power, Centennial Resources, ticker CDEV. Harking 600 million in possible positive FCF this year, oil anywhere near 110 and natural gas at around $5. For every dollar increase in oil, that could carry along with it a dollar add-on in CDEV stock. Putin acting toughly forces Russia to subjugate itself as a Chinese client state, giving them lumber, soon everything for some second-hand tech and market. Some on TV can, with a straight face, sell you toxicity and you, as China waiting in the wings, could use Russia as a client proxy. America got this war machine rolling if a case arose. Around Washington, senators looked to lock up all gold reserves of Russia. Europe calculated, jointly offering bonds, and ticker EURL has unfurled strength. Masses panicked some more, while a Bible bounce came in. Nodded to this, a lot of newbies tried shorting late, sitting on entry levels that got squeezed out. They poked America with the president low in popularity. Not to chime on and on about it, CPI and Biden went hand in hand. Chicken, citrus prices, gas. Shorts have and may continue to get unwound with unseasonably too much downtrodden sentiment. Taking a balanced view, many data points display an ascending pattern to come. Thank you everyone for stopping by. For clarity, bona fides, and all things finance and markets and key news. Join us, join Jack next time.